Let's take a look at your market news now. Asian stock markets fell again today following US President Donald Trump's latest tariff threat or salvo. China allowed its yuan to sink to its lowest level this year, around 7 to the US dollar. That's significant because it could further anger Donald Trump, who believes that China unfairly suppresses the value of their currency to bolster Chinese exporters at the expense of the United States. Let's take a look at what's happened. The Nikkei is down to 20,591 points. Hang Seng also down at 26,267. Shanghai Composite Index also down 2,867 points. Global stocks fell for a sixth day today as that escalation of trade tensions between the US and China rattled the markets. US markets were tracking a sell-off across Asia after China struck back, as we've just said, in that trade dispute with America by letting its currency weaken. The Dow Jones Industrial Average was down around 1.32% to 26,100 points. The S&P 500 down 1.43% to 2,890 points. And the Nasdaq Composite Index, not surprisingly, down 1.81% to 7,603 points. Let's continue to take a look at what's happening in the markets. We cross to the Johannesburg Stock Exchange. My colleague Arabina Gumede is standing by. Arabina, we're not being spared when those two giants are fighting over what's happening with trade tariffs.
Yeah, unfortunately, we won't be spared, and clearly the global phenomenon is that where the world is also going to suffer from it as well. And Zinga, so local market down 1.8% as well on this side. So it's really interesting to see how things will fare for the remainder of the day, perhaps for the remainder of the week. It is clear, however, that China and the United States and their tussle are certainly going to impact the market a whole lot more. And the interesting element here has been the likes of Huawei as well, saying that they're beginning to practice and try out their new operating system, Hangmeng as well is what it's called, and that is set to be launched at least by the fourth quarter of this year. Whether it will be able to be a real game changer, considering that the rest of the world and the rest of the global market has really tried to use Google or of course the iOS system from Apple, and that certainly is going to be an interesting measure. But for now, of course, things do remain quite difficult, and the market will certainly be looking out for how things fare when it comes to that trade dispute. We'll unpack everything in just a moment. Let's unpack the numbers though and see how things are faring out in Europe and locally. Well, that market picture clearly, as you can tell, they're a little bit downbeat across the globe, not just locally, but certainly 1.8% down here as well, and still hurting. Gary Boyson from Rand Swiss joins us then to unpack that market picture a little bit more. Gary, thank you so much for the time. Big falls there coming through to this market now.
Yeah, big falls and largely based on international factors. So this comes on the back of Donald Trump announcing, potentially adding 10% onto a 10% tariff onto $300 billion worth of Chinese goods. That's set to start 1st of September, and China seeming to retaliate. So China coming out and allowing the yuan to weaken for the first time below 7 yuan to the dollar, which has always been a very key level. It hasn't been below 7 to the dollar in I think it's up to 11 years now.
Sure.
So it's a long time, and it's a clear signal because we know the US administration has been focused on China as a currency manipulator. At the same time, China is also looking at suspending imports of farming goods from the US, which is
Sure.
I think a deliberate move to hurt Donald Trump's voter base.
Yeah.
And certainly the trade war is escalating, and this is one of the reasons that we're seeing Asia down heavily. We're seeing continuation information from the slides on our local market from Friday. And when you have a heavyweight like Nasdaq down over 4%, or at least 10 cent over 4% in Hong Kong this morning, you're going to see Nasdaq down close to that today as well.
Yeah, 3.4% there.
Drag the overall index lower.
Yeah, and that's bound to hurt. Donald Trump will, however, want to win here in some way or other, surely, especially adding to the fact that elections are coming up very soon. It's just over a year and a half or so for them. How do you find a win in a situation that you've just completely escalated now to immeasurable proportions?
You're certainly getting very mixed messages from either party, because over the weekend Donald Trump announced that negotiations with China were going very well.
Yeah.
And while markets tend to disagree, it's how he's spinning it to his voter base. And there's a lot of research that shows that he actually does better in polling numbers when he takes a tougher stance on China. It's certainly something that the American electorate plays into. So part of this is him posturing ahead of the election campaign. Hopefully he doesn't do too much damage to global growth while he's about it.
The month of August alone, the rand falling 6%. That's huge.
It is big. So you look at it, and we can kind of feel the sentiment, because we have an offshore transfer business. Now, as soon as we saw the rand getting to sort of the 14.20 against the dollar, we started getting clients phoning us looking to externalize funds. We looked at it, and around 13.85 was very much the bottom. Normally, that's also the margin that a bank would charge you.
Sure.
So if someone's saying get me out at 14, as soon as it gets to 13.85, that's where the bank's going to take you out. So there's been a lot of support around there. As for the slide now, this is certainly on the back of risk-off trade. As markets start to panic, you see that big extended devaluation. Where it's going to go is difficult, because certainly the feeling on our desk at the moment is that everyone's now hanging back, saying, "Oh, wait, like we want to wait for better levels." And as soon as you get that sentiment, you start to find an upper limit of where the currency is going to slide to. Recent PPP projections it still has the rand trading around 14 at the end of the year, even if we did potentially get a downgrade to junk status. So it does look a little bit extended out towards 15 at the moment. Not to say it can't go to 15.30, not to say it can't go to 20.
The mark. Exactly, that certainly looks the mark. I mean, earlier today, just around 13.85, 13.86 or so, then just blows out again to around 13.94, now 13.91, 92. Is there some sort of sustainability, or is it just a mixture of the own goals we've certainly had in the recent 2 weeks, but clearly then just those international factors? There's no mitigating that, is there?
No, there's always a play-off between local and international factors when it comes to something like the currency. But I think what people have to remember is that the rand is one of the most volatile currencies in the world. It's very much influenced by international trade flows as well. So part of the reason that we see such a large volatility in our currency is a lot of people play emerging market themes through our local currency, because it's such a liquid one. So when you see the risk-off sentiment, you generally see the rand weakening more than other emerging market currencies, and that's just because of its liquidity. So at this stage, I would say to people, don't panic. Just because the rand's getting weaker,
very difficult not to.
Take a deep breath. There's a good chance it's going to get stronger from here.
Oh, we certainly hope. I mean, at 14.91, that's probably the worst market since at least early June, if not earlier than that, actually, at some point. So we're hoping that it doesn't blow out a little bit more. Let's talk about that oil price now as well. It had gone up, if I'm not mistaken, 3% on Friday. A big more than 1% fall today. Just topsy-turvy.
Very topsy-turvy. And if you look at what's going on, I suppose, in international oil markets, we saw, on the kind of retaliatory measures that China put in, we saw the oil price softening immediately. Now, part of that is, if we see a full escalation of the trade war, you will see a subdued global growth. That means less demand for oil. If you're not demanding as much oil, obviously prices must fall.
Yeah.
At the same time, there was an interesting report out from Bank of America Merrill Lynch saying that if you potentially saw the patterns of trade changing, where China starts to import oil from Iran, which the US obviously has sanctions on at the moment, you could potentially see oil fall another $30 a barrel. Obviously, Iran not able to fill many of the supply gaps at the moment, and if China now sees the trade war escalating and they deliberately trying to punish the US, they could potentially ignore the sanctions. And if that's the case, you'll see far weaker oil prices, which at the same time will be very positive for South Africa as an oil importer. Hopefully that'll keep our inflation under control, and maybe we'll get some more rate cuts.
What's the worst that could happen now with this trade war? What is your Armageddon, if we want to call it that?
It's difficult to say what the Armageddon point is. You're looking at it at the moment. I mean, there's going to be significant damage to the overall level of global economic activity. Like that is quite clear already. We're starting to see that. When you see just the investment decisions from big companies, when you have uncertain regulatory frameworks, and we know only too well in South Africa, when policy is uncertain, investments aren't made. CEOs look at it and say, well, if I'm not sure whether I can put a manufacturing plant in Mexico or China, they hold off and they potentially don't set up the manufacturing plant. So you are going to see a contraction and certainly a contraction in global growth. How it plays out is very, very difficult to say, because at the moment what we're also seeing is expectations of further rate cuts from the Fed coming through. Now, if that happens, that's obviously going to stimulate asset prices. So sometimes you get that almost like counterintuitive. As things get worse, stock markets actually end up doing better because of the monetary policy. So
always good to stay in equities in some form.
Very difficult to predict how this is going to play out. And even in an Armageddon situation, if you look at it from an asset class point of view, it'll probably just be a very good time to buy equities.
Oh boy. Okay. Stay in equities is essentially the message I just got out of that. Speaking of equities, Merafe Resources coming out with their interim earnings then today as well. Then a set of numbers where you see, yes, revenue climb around 6% or so, but headline earnings getting smashed just over 60% there. How good a company is Merafe, considering that the rest of the miners seem to have tried to stabilize? And of course, this is a time when Merafe itself is in a totally different class, if you want to call it that. How would you rate the company?
So if you look at Merafe is essentially a ferrochrome, and chrome ore miner. It does it through it's got a 20% stake in a joint venture with Glencore. Now, it's very, very sensitive, obviously, to ferrochrome prices. Now, ferrochrome is an input to stainless steel. So as long as people are demanding stainless steel, there will be a demand for ferrochrome. Now, in these numbers, as you said, the headline, at least the overall revenue numbers weren't too bad. It's slightly higher. The production numbers also, pretty much in line with where we were at in the last reports. But it was really the earnings that came down so significantly. Now, headline earnings dropped 61%, which was right in the middle of the guidance that the company gave us, about mid-July, which was 57% to 65%. So, I don't think this is going to shock the market. So you're not going to see huge underlying share price moves in Merafe because it was well telegraphed. But most of this is coming on the back of lower ferrochrome prices. So the ferrochrome price has collapsed. I think from it's $1.46 down to about $106 per pound. And obviously, with your final price decreasing, your sales are going to decrease as well. So still turning a profit though, which is decent for the miner. But I think what maybe has spooked the market a little bit today is also they've held back on their interim dividend. They're opting to just hold back and say, times are a little bit uncertain. Whenever you've got a single commodity producer like this, it's so at the mercy of what the price of their final product is, that which is fluctuating on a global market, that I think they're just being prudent. They do have a dividend payout policy of 30% of headline earnings, so we can hopefully expect that in the full year numbers.
All right, Gary, thank you so much. Appreciate it. A good and really interesting chat there, really, about that market picture as it continues to sit negative today, but perhaps still a good place to stay on the long run. Of course, just choosing the right kind of assets for yourself there. But down today, 1.8%, a massive fall then, following global stocks and global markets as well. Then, just what happens with that US-China trade war? Well, I guess we'll have to look to Donald Trump's Twitter feed for more on that one. From me, however, that's where the buck stops. It's back to my colleague Nzinga right after this.